Thanks for having me on the show. I think pretty interesting, but at the same time, worrying times for Southeast Asian e-commerce or consumer tech space, and especially for local incumbents in various countries. So the reality is this, that if you were to think about the perspective about what eventually happened, Goto decided to transfer its Tokopedia business, which is a flagship business, probably from a long-term point of view, a much larger part of the value of the overall Goto franchise, to TikTok, and took a minority stake of 25% eventually in the venture. Now, remember, this $1.5 billion is not something which is coming to a Goto shareholder. It is essentially going in as such to that particular venture where Goto has a minority shareholding. So in some sense, what has essentially happened is that Tokopedia or Goto has essentially given up a direct presence in e-commerce and transferred it out to TikTok for a minority stake. Now, this is what the market did not like. And the reasons are very simple, that even if somebody has a different view on whether Tokopedia should have been a part of Goto or should not have been a part of Goto, the reality is that the market was expecting Goto to monetize it. So monetization primarily means that you would have got something out of the stake, something like some money out of the stake into Goto's shareholders. So the run-up of the stock, which has almost doubled over the last 1.5 months, was primarily on those expectations. And hence, when this transaction came through, it was a bit disappointing for investors. So I wasn't very surprised at the kind of a scale back in the stock price we saw yesterday.
So, Venugopal, help us understand if we see a GoTo now as an entity become what perhaps just considered Tokopedia now as an associate or a minority associate at that. Does that mean that we might even see the contributions to earnings from Tokopedia actually diluted because of this investment and the fact that TikTok is now the senior parent, for lack of a better term, after this transaction is completed?
So that is right. I mean, so one can debate about medium to long-term success of the venture Tokopedia itself. But let's put that aside. Long-term, the fact that the stock had a certain market cap, there was an expectation of Tokopedia turning profitable and contributing 100% to Goto, right? So now what has essentially happened is in an enlarged entity, of course, they have a minority stake. The enlarged entities, of course, TikTok is contributing its long tail sort of an e-commerce business to the entire enterprise, right? Apart from what Tokopedia is offering. But remember, Tokopedia's GMV is 3x the size of TikTok's GMV in Indonesia at this juncture. And more importantly, Tokopedia's venture is a relatively higher AOV venture, and which basically means higher order values. And more importantly, it is much better than a long tail business, which is usually very tough to execute. So the reality is that now you're going to be getting 25% of the sort of venture. Initially, it would be anyways losses. And long term, of course, you'll see some contribution to profits coming in. So overall, at this juncture, it appears it was lower in terms of contribution to long-term cash flows compared to what would have been had they sort of run the business themselves.